Hello traders, hello everyone, welcome to our today's update with intraday charts in the video format. Firstly we will begin with the euro dollar as normally. Still, market is sideways here. I do not see any clear directional move, but what I see and what I think it might be important is this structure. Notice that we have waves 1, 2, 3, 4, 5, 6, 7 swing move to the upside. And because of overlaps, this is seen as a corrective movement. There's also 61.8% of wave A of this rally. So ideally, this can be a triangle if we consider that upside can be limited in the near future because of overlapping activity. So I assume that market could actually come a little bit to the downside, maybe even with a very sharp decline if we will consider what dollar index could do. So in my opinion, euro dollar will face limited upside. Dollar may get stronger based on euro dollar outlook, based on dollar index, based on dollar yen. Okay, so we go step by step. Firstly, as I said, euro dollar has an overlapping activity to the upside, which means we can see a limited strength here. And if we take a look on dollar index, what is probably very clear here is that this was a triangle, probably placed in a wave 4. I'm not sure where wave 4 went, so I will just put a label here. So this can be a wave 4 completed and new wave 5 underway. What is really interesting and important that this was quite a strong bounce. Notice that this was a 5-wave move, while this is very slow and overlapping setback. So in my opinion, this is perfect correction, which means more upside. So I'm expecting more dollar strength. Definitely watch out for these supports around on dollar index around 96.50, maybe 96.40, which is also 61.8%. And once this will play out, that's when we may see limited upside on euro dollar. So here's also a 1 hour closer look. Also, this trend line support should be very important if you extend the former this line out from former swing lows. Okay, so there's a 50%, there's a 61.8% as I said, and actually 161.8% extension of the first zigzag. Okay, so dollar index could see limited upside, limited downside, and if that would prove correct, then dollar yen, which is already very strong, could see more gains here. Notice that this was a very nice 5-wave movement while we are just moving sideways at the moment. So I'm thinking should be like that. I'm thinking that this is actually still correction in progress. Notice that over the last few days we haven't seen much of the movement here. So in my opinion, if market is low, normally that represents correction. So I would anticipate a new break to the upside if we consider that the previous strong move was also to the upside, this one. Okay, so looking at a 4-hour chart, ideally we'll see an extension higher into wave 3. Of course, there's also alternate scenario that this is actually a limited upside for a wave 5, but because of dollar index, I would not be surprised to see more gains here. Also, 10-year US notes is very important here. Just a second. Okay, so the 10-year US note, what is really interesting here, that even if we think that this will be only ABC decline, okay, then still there is room for more weakness. There's equality level where wave C is normally equal to wave A. So if you are tracking impulse, then in such case it can be also minimum target for a wave 3. Okay, also because wave 3 is very rarely smaller than wave 1. So there's also 261.8% extension as well of this latest higher degree correction. So in my opinion, there is room for more weakness here, which means yields may see a push to the upside, and dollar yen of course could be a good buy. And also if we take a look on this daily chart here, okay, of the 10-year US notes, then what is really important here is that the market took out this trend line this week, and it looks like that more damage can be done for a wave A, then bounce for a wave B, then weakness for wave CF2. So definitely there's room for more weakness on 10-year US notes, which means S&P 500 and stocks in general could see more upside. So if we also take a very quick look on this one, I mean, definitely I'm looking for a break to new all-time highs. I have been talking about this for a while, but been anticipating a correction. However, I'm not really sure that we will see this correction from here, probably from a new high, because there will be flows will probably change there because of a lot of new orders around at these very important highs. And also because of the 10-year US notes, I'm not really sure that we will see pullback from here. Probably, as I said, from a new high. But on the short-term charts, however, especially from a trading perspective, you definitely would not buy market here if we consider that you have potentially 5 waves up for wave 5 of a higher degree right into our fib levels. Of course, there's room for 29.30, but really that could be it. Also on the 4-hour chart, notice that this is the same zone here, resistance zone for wave 3. So ideally wave 4 pullback will occur to fill this gap, and then we see a next leg to the upside. Okay, but from a trading perspective, as I said, S&P 500 is really high. You definitely want to pull back, and this gap could be really very interesting. Okay, now let's take a look also at ASEAN. Where's here it is? Okay, so ASEAN also broke out of this consolidation in a wave B, so looks like more upside is here because we have a very decisive break. So this can be wave 1, 2, now extended wave 3, then watch out for wave 4 pullback, more upside for wave 5. Okay, maybe we will get even more extended wave 3 than we think, but we are here at the first potential resistance right now. So what's the idea? Well, I would pay attention to this wave 4 whenever it develops, maybe from here, maybe from a little bit higher level prices. Ideally, we will see more upside here and then wave 4 pullback, let's say from around 81. So if that would play out, then definitely this wave 4 would be my radar screen for potential longs. Okay, invalidation level clearly is this wave 1 former swing high, because that's the area wave 4 must not trade into. What I also see now is that this was this old swing highs, limited weakness here in this recent pullback. That was a very nice actually, but I'm thinking that this was wave 4 of wave 3, or maybe we are still in this wave 3 of lower degree, but nonetheless, watch out for this wave 4 pullback and then expect more upside. Okay, also what we will take a look at is gold. I mean, gold made a very important break to the downside yesterday. Now on the daily chart, I still see room to test this trendline support. So on the 4-hour, I'm expecting to see more weakness, because this could be a very aggressive bearish impulse in progress. Maybe we are now in the middle of this wave 3, so watch out for this resistance right now here at 1280. If we see a drop below back to 1275, then this would already make quite a deep overlap between recent small pullback right there, which means that this could be seen then as a completed correction and more weakness could be seen. Also, I mean, gold, as you know, has been much weaker compared to silver, but watch out for silver. I mean, silver here is very interesting. I mean, there's no break of this trend line, which normally gives me an idea that we are in a wave 3, but what is very important is this current structure on the 1-hour chart. Waves 1, 2, 3, 4, and wave 5, and then you have an ABC move. ABC move right into this wave 4 resistance. So if we also use some fibs here, notice the 50% here, 61 is a little bit higher, and then you have also, I believe, wave C to A around there, which is around 15.05. So this is a very interesting zone. And if silver, which is not that weak like gold, will see limited upside, while dollar index could break to the higher, then obviously gold should stay under pressure. Okay, do I have anything else? Well, yes, I have crude oil. Now, crude oil, as you know, I've been calling for a temporary pullback here in wave 4. What was very interesting is that this was a very nice overlapping setback back to this old swing high, which got the weakness here for wave 4. low, and we have seen a very nice bounce, as you can see here, from $63 per barrel. So I think that we are now headed higher for a wave 5. Targets are around $66. And also what is important is that if you connect wave A and wave C low and put a parallel trend line at the top of wave B, you will see this breakout. Okay, normally I use this technique whenever I have a deal with a flat formations. Okay, so if I think that wave C is completed, then I will try to try to connect the trend line from waves A and wave C low, and then when I see a break above this parallel trend line, that I put it on the wave B swing high, when I see this breakout, normally this gives me an important confirmation that we are completing wave 4 and that we are in the middle of wave 5. So I'm thinking about more upside here, and also clearly this is a very sharp price. Looks like an impulse to me. Okay, thank you very much for your attention. See you in Slack and with new intraday updates later. Bye.